May 22nd, 2022. Nathan from Queens, Ultimate Traders on Reddit. This is video 2, the state of the market right now. So as I've been writing on Reddit, Reddit is my biggest, social media in terms of the stocks. I haven't really been on social media for a long time until last year. As I've been writing on Reddit, I'm here to tell you on this YouTube video that as it stands right now, before checking into the next rate hikes, what's going to happen with earnings, which kicks off on the third week of July, is that if the Nasdaq trades around 11 to 12,000, S&P around 3,800 to 4,200. In those range, we can go back and forth. If you don't want a rug pull, which is like a daily crash of 3% on each index, you don't want it to go crazy up or crazy down. Now, that doesn't mean that the market can't fall below 11,000 on the Nasdaq. What I'm saying is the information that we have right now, we know we're going to have a rate hike of 0.5 mid-June. We know already that we're going to have another rate hike of 0.5 the end of July. What we don't know, and we already know now, as the earnings that are coming out right now are actually failing. I don't care what they tell you on CNBC, what they tell you on TV, they are wrong. I have a video explaining my grading scale on earnings, okay? It doesn't mean you beat earnings. You don't say that the earnings were good because earnings were top line were in line in the sales and bottom line missed. That is fail. That is fail. That's not even a 65. That is a 60. I don't know what they're talking about on CNBC. It's a lot of bozos saying that the earnings have been good. No, they have not been good. A lot of earnings have passed, but if you get a 65 in school, because you just passed, because indeed, yes, a lot of S&P companies have passed with the 65, but a 65 is not good. All right, if you don't beat top line by 3%, you don't beat bottom line by 3%, that to me is 65. This is your money. This is your money, not my money. I don't give away grades. A company has to beat by at least 3% on both the top and the bottom to be really good. If they beat by 3% on the top, miss on the bottom, that is a failure. It's a failure. So earnings is not good. It's not horrible, but it's not good. So when I say it's not good, the majority of companies are coming in at a 60 or 65. I don't care what kind of FUD they're trying to tell you on TV or what kind of FUD other Redditors are spreading. I mean, yesterday, actually it was Friday, I was going crazy with some kind of a guy on Reddit that's famous on Short Squeeze, the Short Squeeze sub. He's going crazy on ATER, A-T-E-R. ATER is a trash company. Okay, I understand that you're trying to get an army. Trying to get an army to load up and try to buy because you guys believe in the short thesis. But come on, that's garbage. But anyway, I'm saying, and that earnings was horrible. Earnings were not bad. They were absolutely atrocious. So we're going back into earnings. So we already know rates are rising. We know inflation was still 8.3. June inflation is supposed to be around 8. July inflation is supposed to be 7.6. I am telling you, we're going to get numbers over 8 on both. What's going to happen if numbers are over 8 on both June and July, we might get 3 or 4.5 rate hikes. And that is not good for the market. The only way to combat interest rate hikes is to slam earnings. And as we see right now, earnings are not slammed. That said, I'm not going to say that the Nasdaq is going to fall below 11,000 yet. If earnings come out really, really bad, rate hikes keep going through the roof, we have inflation really, really bad, the war in Ukraine, Russia does not end. That means the likelihood of inflation goes even higher. We're having food inflation now too. Then I could see the Nasdaq falling below 10,000. I could see the S&P falling below 3,600. Now, I'm not saying that's going to happen, because to me, I don't know what these people on TV are doing. You know, they like to give targets for 1 year. They like to give you price targets like every 4, 5, 6 months. Maybe they're lazy, because when you're doing this in the market and you're trading, not only do you have to check quarter to quarter, because we do not run companies. We do not run companies. We can have an amazing company that was slamming, knocking it out like UPST. Last quarter, not this quarter that they just reported. Last quarter, they announced a buyback. They slammed earnings. It went from $90 to $155. This quarter, they actually beat top and bottom line, but they said sales were going to go, instead of 100%, it's going to be about 50%. The stock went from around $70, $80 to $26. So we do not run companies. So we have to go quarter to quarter and see what's going on. But not only that, we have to look daily. What is going on with the world? What is going on with oil? What is going on with gold? Are they having wars? It's very critical. And I know people on CNBC, they don't want to change ideas every day because it's too much work. That's what I'm going to say. I'm not going to say that they're all bozos, even though they are all bozos. 95% of the people, I started watching CNBC almost daily at Thanksgiving weekend. That's when I retired from work. I used to work for a health insurance company. So when I retired from work, I started watching CNBC almost every day. Majority of the people that I see are bozos. So either they're bozos or they don't want to do the daily work. Yes, you have to do daily work because things change in the world and you're going to have to adjust what your price targets are, what your trading patterns are going to be, whether or not you want to buy and sell something. It has to adjust. You cannot go every single day with the same plan because something can happen in the world tomorrow that we don't know about today. All of a sudden, it's going to change what you're going to do tomorrow. And that's why I don't like when people try to tell me day before, a week before, some people ask me, that night, what I plan to do. You do not plan what you're going to do a night before. You might look at 20 stocks a night before, but you go around 8 in the morning or 8 to 9 in the morning with a plan of what you're going to do that day. I put on my Reddit 5 trade ideas. And generally what I wanted to do, what I always did before I came to Reddit, was on my plays watch list, I had maybe 30 or 35 tickers. Right now I have like 300 because I have so many of you guys. So I had about 35 plays tickers on my plays. And I would have about 10 to 15 ideas. I didn't have to do one of them, but I already had a plan of what I was going to do based on what was happening in the market. So every day, every morning, you got to come out with a different plan because you got to see what's going on in the market and decide by what's going on. Right now, the data is horrible. It's not bad, it's horrible. Some people are asking me, why is it horrible? It is horrible because our companies are not hitting. Inflation is super high. Rates are rising. What more do you want? People also say, how come I'm not positive? I am not a Debbie Downer. I'm giving the data. And judging from the data that I get, I'm analyzing, I'm watching everything. And from my experience, I'm reading off of all the data I'm getting and providing for free to everyone my analysis. And believe it or not, like I said before, no one has my analysis. I don't care if you're a billionaire. I don't care if you're a hedge fund manager. I don't care if you're famous. To me, I don't care. No one has an analysis that I have. Those people are doing it for the money. I've done it because I was born into this. Those people, when they lose money on a stock, they get angry, they just go on to the next play. When I lose, I want to analyze what happened. Why? What could have been done? What was going on that day? Why did I do that? That doesn't mean that I can't lose, but I have to analyze when I lost, why I lost. You know, if I was throwing a grenade or throwing a runner and I lose, I knew I was taking a risk. You know, I don't like buying a company like BZH, but I don't have it right now, that makes money and lose on a company that makes money. That doesn't happen. But when I buy a company that does bad and I take a risk and I lose, it's because I knew. A lot of these fools are buying stuff like Netflix, Facebook when it was high, and getting crushed. Okay, you guys didn't do the research. You guys didn't pay attention to what was going on. You know, so I don't understand that. So you gotta, every single day, you gotta see what's going on out there. You gotta see what the competitors are doing. Is the sector doing bad? And you gotta adjust. But the state of the market is not good. So big data is gonna be early June CPI, middle of June a rate hike, third week of July earnings, end of July another rate hike. If we have big CPI over 8% in June, over 8% in July, bad news. Rates are going even higher, and we have to look at the third quarter. Because right now, the way it stands is not our number that I'm looking on the Nasdaq or S&P. It's not a price that I'm looking at Amazon to hit the bottom. I'm trying to see data. I'm trying to see sentiment in the market. Sentiment is not good. Data is horrible. And that means, like, if the second quarter numbers are bad, that means we have to go into the third quarter. Third quarter earnings are third week of October. So right now it's May 22nd. Just to give you an idea, we might be in a bad market for 5 more months. The only way we have a good market sooner is if July data is good. All right, so good luck. Every day we have to analyze. We have to decide.